Hi Forex traders, welcome back. My name is Francis, Forex Trading Institute. Welcome back to the third episode of the Learn Forex Trading in 30 days. And in today's episode of the training, I'd like to take you through how to read Forex trading sessions and how to trade using the different Forex trading sessions that exist in the financial markets and specifically the foreign exchange markets. If you are a new viewer, I'd like you to click on the subscription button and don't forget hit the notification bell so you stay updated every time I post a video. So today, like I said, we are going to consider Forex trading sessions. It's been said that Forex trading is 24 hours, 7 days of the week. It is true, but in another way, it's not completely true. Okay, the beauty of Forex trading is in the provision of different trading sessions. If Forex was going to be made, or if Forex trading should be done 24 hours, then I think that is completely stressful, and that's not what we want to achieve by trading. We want to achieve financial freedom, the ability to have whatever you desire as at when you desire it, to the degree that you desire it, and still have the time, the energy, and the peace of mind to enjoy all of the money you make from foreign exchange trading. Okay, so if you cannot preserve time, then trading is completely stressful. So this is why I want to teach you how to identify the most volatile trading sessions and how to know which of these sessions you should trade and when to stay off the market. Okay, because trading is not completely 24 hours, 7 days of the week. The first thing I'm going to correct is that trading only happens between Mondays to Fridays, the first 5 days of every week. That's when the trading activities usually happen. Saturdays and Sundays, globally, the markets are closed down until Sunday opening. Okay, so the market opens on Sunday, but it closes on Friday. So guys, let's quickly go to the different trading sessions that we have in the FX market. We have about 5 important trading sessions that you need to learn, and each of them is named after a major financial center or city in a particular geography of the globe. These 5 sessions are: number 1, Sydney, which is the capital of Australia; number 2 is Tokyo, which is the capital of Japan; Frankfurt, which is the capital of Germany; London, capital of Great Britain; and New York, capital of the United States of America. These are the 5 major trading sessions that we have in the foreign exchange market. We want to position ourselves in one of these trading sessions or 1 or 2 trading sessions so that we can make use or maximize all the opportunity that exists during these trading sessions. Personally, I trade only 2 trading sessions. I trade the London session and the New York session. I stay off the Sydney, Tokyo, and Frankfurt session because it's not suitable for the geographical location I belong to. Okay, so let's move forward. Trading sessions and the time they begin and end. We are going to look at these trading sessions and the time they begin and end, and I'd like you to actually pay attention to these things, because when we start learning about entry signatures, you are going to see how trading sessions are actually very important, because in trading, time comes before price. Okay, this is why we always emphasize that trading is actually a confluence of time and price. Not just price, but the confluence of time first, then price. You need to know when to execute an entry and when not to execute an entry. There are 2 basic seasons of the year. Number 1 is summer, number 2 is winter. So this summer is usually between March to November, and during this season of the year, we would like to look at how the timing are captured on the different time zones. So we are going to be looking at the different trading sessions and their timing, when they open and when they close during these 2 seasons of the year. So the Sydney session opens at 6 p.m. Eastern Daylight Time, which is equivalent of 10 p.m. GMT time. Okay, the Sydney session closes by 3 a.m. Eastern Daylight Time, and it closes 7 a.m. GMT time. Now, I don't know your geographical location, but wherever your geographical location is, I will show you an application that helps you convert this time into your own time. So the second is the Tokyo session. The Tokyo opens around 7 p.m. EDT and 11 p.m. GMT. It closes 4 a.m. EDT and 8 a.m. GMT. The London session opens by 3 a.m. EDT and 7 a.m. GMT, and it closes 12 p.m. EDT and 4 p.m. GMT. Don't forget, this is during the summer season between March to November. Okay, then the New York session opens around 8 a.m. EDT, Eastern Daylight Time, and 12 p.m. GMT, and it closes 5 p.m. EDT, Eastern Daylight Time, and 9 p.m. GMT. This is during the summer season between March to November. You have to pay attention to these things I'm emphasizing, okay? Because when the daylight savings come, it's going to affect how these timings relatively occur in different locations on the earth. So you have to understand how these things really reflect on your time zones. Now, the winter season is between November to March, and we said the summer is March to November, winter is November to March. So let's look at the different times. So let's look at the different sessions and their opening and closing time during the winter season. The first is the Sydney opening. The Sydney session opens around 4 p.m. Eastern Standard Time and 9 p.m. GMT. This is contrary to the summer season, because in the summer season it opens 6 p.m. Eastern Daylight Time and 10 p.m. GMT. And here we are now seeing in the winter season that the Sydney opens 4 p.m. EST and 9 p.m. GMT. It closes 1 a.m. EST and 6 a.m. GMT. Okay, the Tokyo session opens around 6 p.m. EST, Eastern Standard Time, and 11 p.m. GMT. The Tokyo closes 3 a.m. EST and 8 a.m. GMT. The London session opens 3 a.m. EST and 8 a.m. GMT. The London closes 12 p.m. EST and 5 p.m. GMT. The New York session opens 8 a.m. EST and 1 p.m. GMT. This is the New York session. And then the New York session closes 5 p.m. EST and 10 p.m. GMT. This is also contrary to the summer season. In summer, it closes 5 p.m. and 9 p.m. GMT. We're now seeing in winter that the New York session closes 5 p.m. EST and 10 p.m. GMT. So guys, I'd like you to actually learn how to convert these things to your own time zone. There's an application I usually use. It's called TimeBuddy. 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 That's the application I use to convert these times into my location or my own geographical time zone. Okay, so there's something called market overlaps or session overlaps. Session overlaps is actually when two forex markets are open at the same time. During this session, the liquidity and the trading activity gets maximized. Okay, so you need to know when there is a market overlap. In other words, these are the times which are best to trade. This is the times that are best to trade because of the high volumes generated by multiple market sessions. Okay, so when I have a session overlap, that means two sessions at a time. That's actually a good time to trade because there's going to be more liquidity and volatility during this session. There are three key forex trading overlaps and we're going to look at them. So the first is the New York to London overlap, which is usually between 12 to 1600, which is usually between 12 to 4 GMT time. Okay, and during this time we have about 3 sessions that are active: the New York, the London, and the Swiss franc or the Frankfurt session. They are actually active during this session. So during this session you would have active pairs like Euro USD, Euro GBP, GBP USD, USD CHF, and Euro and GBP CHF. They are the active pairs during this session overlap. I'd like you to actually try to check out these things, and you're going to see that it's actually true. Okay, so during this 12 to 4 p.m. GMT time, you'll notice that there's a New York to London overlap, about 3 sessions that are actually very active. Okay, then we have the second, which is the Tokyo to London session overlap between 7 a.m. to 8 a.m. GMT time. And then this Tokyo to London overlap begins with the opening of 3 major European markets: London, Frankfurt, and the Zurich. And so the most active pairs are USD JPY, Euro JPY, GBP JPY, and CHF JPY. These are the pairs active during this Tokyo to London session overlap. Okay, then the third is the Sydney to Tokyo overlap. This is usually during the 0 GMT to 6 a.m. GMT. And then during this session, you will have active pairs like AUD USD, Euro AUD, NZD USD, AUD JPY, AUD NZD, and NZD JPY. Okay, so guys, these are the 3 forex market overlap that we have. There is an application I use to clearly identify session overlap. It's called FX Hours. FX Hours. I'd like you to download FX Hours on your phone, and then it's going to show you when a session is about to open and when a session is about to close. And it's also going to show you when there is a market overlap, when there are more than one session active in the market. So guys, let's look at the best times and days to trade forex currencies. The best time to trade forex is the London session, which is traditionally the most active forex session, as it involves the transactions of a great number of European countries, UK and Euro countries. The second most active session is the New York session. The overlap between these 2 sessions, London and New York, offers the best opportunities for currency traders. Note that during 12 and 2 p.m. GMT, 3 markets are open simultaneously: New York, London, and Frankfurt. Okay, these are the best times to trade the forex market, the currency market. Then when are the best days to trade forex? There are also certain days in the week where all the markets tend to show more movement. When 2 sessions are overlapping, of course, these are also the times where major news events come out to potentially inject volatility and some liquidity in the market. Okay, the European session tends to be the busiest out of the 3. The middle of the week typically shows the most of the movement, which is Wednesday, as the pip range widens for most of the major currency pairs between Tuesday, Wednesday, and Thursday. Fridays are also active until 17 p.m. GMT. That's when the market closes. Okay, so when are the worst times to trade? The worst times to trade is on Sunday, usually when the market opens. Everyone is sleeping or enjoying their weekend. The professionals are sleeping, the banks are sleeping and enjoying their weekend. You don't want to be caught trading during these times of the week or time of the day. Okay, so on Fridays, liquidity dies down because the market would usually cap up the week to form the high or low of the week. So during these days, you may want to reduce your trading objective or your goal for the day, and then reduce your expectation, because the day is usually known for low volatility, except there is a high impact news on such days. Then holidays, everybody is taking a break. You should be taking a break too. Okay, major news events, you don't want to get whipsawed. There's something called whipsaw situation, where candlesticks usually take our liquidity on the buy side and take our liquidity on the sell side. It's called frustrate you candle, okay, or frustration candles. That's what it's called. We're going to learn about these things subsequently when I start teaching you about candlesticks and other important concepts that you're going to learn across during these 30 days of learning FX. Okay, so in addition, you can download Forex Time Zone Converter, or just go to www.forex.timezoneconverter.com so that you'll be able to convert any of those trading time into your own time zone. Okay, so briefly, let's look at a few Forex terminologies. There are a few terminologies in the Forex market that professionals do use, and you need to know what they mean. Okay, you are not just a trader. If you are going to grow to the peak of your career in trading, you must learn how to speak like the professionals do. Number one, it's a simple word for buy and sell. In a normal world, if you want to make profit on a commodity, you buy when the commodity is low and you sell it when it's high. This way you make profit. So that's the same way it's done in the forex market. Okay, we buy when prices are low and we sell when they are high. So buying means that the price is supposed to go up, and selling means that price is supposed to go down. So when you buy, you are expecting prices to go up. When you sell, you are expecting prices to fall below the price you sold at. Okay, the second terminology is long and short. So to go long is to buy, and to go short is to sell. The word long in the forex industry simply means buy. The word short simply means sell. Okay, then the next is a bullish and a bearish market. When you hear the word bullish, it means it's a buy market. That means the market is on a rally, it's going up, it's buying. That's why it's called bullish, and the people who are buying are called the bulls. Okay, then when the market is going down, or when a market is selling, it is professionally called a bearish market. It means that the market is going down, just like the crypto crash. When the crypto started going down, everybody started shouting, the crypto is going down, deep and deep. What it's doing actually is unfolding a bearish market. That's how to call it professionally. Okay, then the next is I've already told you the bulls are the people buying, the bears are the people selling. The last is a ranging market. Not really the last, but let's just see. The next is a ranging market. When the market is ranging, it means it doesn't have a particular direction. It's trapped in between two regions. Okay, that means the market is neither up, the market is neither down. It's actually trapped in between two regions. It's between a high and between a low. Like you see it here, it's neither up or neither down. So this is actually a ranging market. This is a ranging market. Okay, so the next is a trending market. When the market is trending, it has a specific direction. It has a one-sidedness. One-sidedness is the key to profitability in the trading industry. Okay, if the direction of the market is upwards, we say that it is an uptrend, and if the direction of the market is downward, we say that it is a downtrend. Like you see it here, this is a downtrend, this is an uptrend. All right, so guys, these are the few things I would like us to learn in today's episode of the training. If you really want to get this PDF, you may want to get it so that you will make reference to it and get to document these things for your learning in future time. I'd like you to click the link on the description of this video. You either join my free Telegram community or sign up for my newsletter, and you're going to get one of these PDFs, all of these PDFs delivered to you. Until next time, I wish you good luck with trading.